In life and in business, no one is entirely above mistakes. But how do we solve and control the problems that our mistakes make? Each and every business uses internal controls to help to avoid and manage these discrepancies. Bank reconciliation is a method of internal cash control. The method can be considered a process that realigns or reconciles the bank account balance of an entity with the balance reported by that of their financial institution. To explain how a bank reconciliation is created, we'll have a look at the bank statements of Tim's Horse Training Institute. His accounts are not entirely making sense as they are not aligning with the balance as per company records. The first step of a bank reconciliation is to reconcile the bank balance to the actual cash balance. As such, we need to account for the money still being processed by the bank to get a direct idea of our total cash balance. This is an example of Tim's reconciliation. To achieve our actual cash balance, a couple steps must be taken. We start by adding the deposits in transit to our balance per bank statement. That is followed by subtracting the total of all outstanding checks from the same balance. This gives the actual account balance we are looking for. Like Tim, you've probably spotted that there is a difference between the cash balance and the recorded balance of his institute. Therefore, the next step in reconciling for Tim's business is to balance the company's book balance with the actual cash balance. The variance here can be a combination of many different discrepancies. Through looking at Tim's accounts, we managed to find the records that led to an incorrect balance. A customer paid for lessons without informing Tim. There was an under-recorded previous payment from a customer. He had to pay his end of financial year service charge, and Tim spotted a mistake in recording the wrong amount received from selling one of his horses. The reconciliation of these points has accounted for the difference in our company's records and should give us an actual cash balance equal to what we got in step 1. After accounting and reconciling for errors, unforeseen account additions, and although not seen in Tim's accounts, NSF checks, your cash balance should equal the company's records. Now, all we need to do is create journal entries for the mistakes to account and adjust the company's book balance accordingly. Now that the ledger has been filled to align to the company's actual cash balance, Tim's accounts have been reconciled and he does not need to worry about the location of his assets. Tim's business is small, which made it easier to find the errors, but it is important to check for any discrepancies and perform bank reconciliations regularly so it is easier to track and correct them when they occur.